So I'm Haseeb. I'm a managing partner at Dragonfly, which is a global crypto fund, and I write a lot of bullshit on Twitter. When I was 18, I was a professional poker player, and 24 is when I moved to Silicon Valley and came into the software industry, and that became my first real job. I was very good at learning how to do my job and at just getting shit done, but I had zero political instincts. Part of, I think, the reason why I gravitated towards being a founder and then eventually toward being an investor is that it's much more of a direct kind of job, in that if you're a founder, it's not about convincing people that you're good at being a founder. It's about just building a company. So I started playing poker professionally when I was 16 years old. It was a very chaotic way to grow up. I learned a lot of lessons from a young age that I think many people in the crypto world learn through crypto, because I dropped out of school to play poker professionally. And I made a lot of money at a young age, but I had no skills. So by the time I quit poker, I was just a college dropout. And when I first came into the space, I was a nobody. And I had this sense that I was late and it had all already happened. And like maybe I was in for like the 7th or 8th inning. The reality is that there's so much to do that there's no such thing as being late when it comes to technology, because it keeps changing, it keeps evolving. There's always another chapter. And the way that I remember describing it at the time is that being an investor in crypto is kind of the best seat in the house, because you get to see everything that's happening, everything that's getting created, all the ideas, and you get to make your own view about how this world is going to end up evolving as a result of crypto. It was such an exciting time because everybody had new ideas, and it was very obvious at the time that Ethereum was not good enough. And I think the dichotomy between infrastructure and applications is kind of bullshit. And what I want to say is that infrastructure is
cool. Awesome. Well, we'll get right into it.
Cool.
So who are you and what do you do?
So I'm Haseeb. I'm a managing partner at Dragonfly, which is a global crypto fund, and I write a lot of bullshit on Twitter.
Excellent. So something I'm curious to start about that I haven't heard much about is your kind of original background and how what were you doing when you were 18?
When I was 18? When I was 18, I was a professional poker player.
Wow.
So I started playing poker professionally when I was 16 years old. I had a very weird upbringing because in a sense, like I kind of grew up, like my adolescence was formed in this cauldron of professional gambling. And so I played poker professionally from when I was 16 years old until I was 21. It was a very chaotic way to grow up, in a sense. I learned a lot of lessons from a young age that I think many people in the crypto world learn through crypto.
Well, there's a lot of poker players, ex-poker players in crypto.
There are, and many current poker players in crypto as well. Yeah. But I think a lot of the interesting thing about crypto and poker is that there's a lot of similarities with respect to the culture. So like crypto, poker is predominantly male. It is people who are not afraid of looking kind of weird and engaging in a relatively subversive profession. Right.
It's like high agency.
Exactly. But also high risk tolerance and not afraid of looking weird. So, and of course, it's also a culture that's very oriented around money. And money is, in poker, money is the points in the game is literally money. And in crypto, you could argue the points in the game are also money. And so that ends up creating, I think, a lot of pathologies of culture that manifest in, a lot of people make a lot of money really quickly and end up kind of feeling very detached or very kind of unhappy. And so you see a lot of that in crypto. You also see people get enormously wealthy very quickly. And you also realize pretty fast that money isn't what makes people happy. And money's important and it can buy you freedom. But money also creates a lot of other obligations. Right. So more money, more problems. And that was something that, as a young man, I saw a lot of young dudes who made a lot of money very quickly and that it didn't make them happy.
It seems like in crypto, there's this phenomenon of like, I remember in 2021, the Dogecoin millionaire who kind of went all in on Dogecoin and he had $3 million and he became a viral sensation kind of even in the mainstream media. And you see this in crypto often where someone will make $1 million, $5 million, $10 million. Yeah. Just from one investment or something. In crypto or in poker, does it ever happen that same way where like someone will go on a crazy run without necessarily having merit? Yeah,
that was Chris Moneymaker. So I don't know if you ever heard that name, Chris Moneymaker. Chris Moneymaker, I think he won the 2006 main event of the World Series of Poker, and it was a huge story because Chris Moneymaker was just like a random guy from like Arkansas or something. He, normally to enter into the World Series of Poker, it's a $10,000 buy-in, but he played what's called a satellite event, where basically you pay like a small buy-in tournament of like $200, and if you win this big tournament, you get a buy-in to the World Series of Poker, which is $10,000. And so he put in like $200, and he made millions of dollars winning the World Series of Poker. And he was just an ordinary dude who got kind of lucky a bunch of times, never had another big break because of course he wasn't a great poker player. But poker, it's a skill game, but there's some element of chance. And most of the time the people who win the really big tournaments are great players. It's not that the person who wins a tournament is the best player every single time. It's not like tennis. Tennis, it's like the better player will usually win, or chess, better player will usually win. Poker is a lot more stochastic, so there's a lot more randomness in the game. It's part of the reason why it's profitable to be a professional poker player. If it was like chess, people wouldn't gamble on it. People don't gamble on chess, but they do gamble on poker. And so Chris Moneymaker, it was called the Moneymaker effect, which is that after 2006, poker became incredibly popular. And the online poker boom really started with Chris Moneymaker, because he was this ordinary guy that everybody's like, oh my God, that could be me. And so that is what caused the rise of online poker in America. And that was what got me, as a 16-year-old kid, starting to play poker online, was because there were all these people playing poker for fun. And it was tremendously lucrative if you knew what you were doing, to be able to learn some strategy and start making money online. Yeah,
so Phil Hellmuth, who I think is classified or kind of generally known as the greatest tournament poker player of all time, is that
one of the greatest? Not the greatest.
He's actually, he went to the same high school as I did.
No kidding.
But tournament, that's a different dynamic too.
It's very different. So I was a cash game player, and cash game players tend to look down on tournament players, to be honest. So tournaments are known as generally being softer than cash games. This is because a lot of bad players or a lot of amateurs like playing tournaments because it's a get-rich-quick kind of thing, right? Because if you win one tournament, that tournament could be worth millions and millions of dollars, and it's like the Chris Moneymaker thing. Chris Moneymaker did not get rich playing cash games. You can't do that in cash games. Because cash games, every single game you're playing with your own money, and you're never going to have 1,000x win in a cash game. But you can win 1,000x in a tournament, right? So cash games, it's like really grinding. Every single day you're in there making money, losing money. And it's like, tournaments in a way is like, playing, buying low cap shitters of meme coins. Whereas like, playing cash games, it's like, okay, you're like buying Bitcoin and selling Bitcoin and like, playing these very, very small
like
movements in the markets.
Trading or something.
Exactly. It's, you're never going to make 1,000x, buying and selling Bitcoin, but you can do that, buying the random thing on Pump.Fun. So as a cash game player, you have a lot more freedom. Because you're not following the tournaments. You don't have to, if you're playing a tournament, tournaments can be multi-day affairs. You have to be sitting there the entire time following the tournament circuit. So tournament players, they just don't have as much freedom and as much choice in their lifestyle. Whereas cash game players, you play when you want, you go wherever you want. And so you're sort of the master of your own fate. But as a result, the games are a lot harder and much more competitive.
And was that your only thing, 16 to 21? Did you ever do any
Not really. I didn't have a real job until I turned, I think it was 23 when I first got a real job.
So 23, what were you doing?
23, 24 is when I moved to Silicon Valley and came into the software industry. So I sort of, after quitting poker, I went through a really just sort of dark night of the soul in figuring out what I was going to do in my life, because I dropped out of school to play poker professionally. And I made a lot of money at a young age, but I had no skills. I was just, by the time I quit poker, I was just a college dropout. I really had no ability to do anything useful for anyone. And so I eventually decided to come to Silicon Valley, learn how to code, and became a software engineer. And that became my first real job.
What was that like, transitioning from like poker to actually having to work? Because
poker is work. It's hard work. It's very, very stressful work. And there are people who don't, people who are not good at their jobs. There's an equivalent of that in poker. But I think for me, what was it like getting a real job? I mean, so one is that I realized poker is a very lone wolfy activity, right? When you're sitting down at a poker table, it's not a team sport. There's nobody at the poker table who wants you to win. Everyone actually is trying to take your money. So when you join a normal company, it's not at all like that, right? It's all about helping everybody else of the team become successful. And I just had no instincts around how to be a good teammate. So I think I was very good at learning how to do my job and at just getting shit done. I think that was my superpower, is just getting stuff done. And people have the impression that I'm a very competent person, but I had zero political instincts. And I think that's part of the reason why I learned very quickly that I did not thrive in large companies. Because large companies, I think they very much are about this kind of political maneuvering and figuring out how to make yourself look good. How do I create the best promotion package so that management is going to think that I'm really great at what I do. And I was just very straightforward. Okay, this is my job. I just need to crush the shit out of this, and that's it, and then go home.
Right.
And I learned over time that hey, there's actually a lot of other stuff you need to do in order to be effective within an organization. But by the time, I think now I'm much more capable of that. But part of, I think, the reason why I gravitated towards being a founder and then eventually toward being an investor is that it's much more of a direct kind of job, in that it's less about convincing somebody that you're good at it. Right? If you're a founder, it's not about convincing people that you're good at being a founder.
Right.
It's about just building a fucking company. And your company is just judged on the merits, right? If you're good, if you have users, if you have metrics, if you have revenue, that's it. You can't convince anyone that you do if you don't. And the same way, being an investor, it's not about convincing people that you're a great investor. You just have deals. And if you have good deals and you make money, then you've made money. And if you don't, you can't convince anybody that you're good at it if you're not good at it. So it's much more direct in a way that, to me, is much more intuitive. That's how my brain works. I don't really have that political module in my brain, which is why I think I'd be a terrible salesperson. I'd probably be a terrible executive. But I think investing is something that I'm abnormally well suited for.
Yeah, it's interesting too, because it goes back to that kind of poker concept of these are the points, these are the chips. I'm accumulating, and this is the primary goal. Where politically there's there's social games and political games, and it's a whole different set. But especially in crypto, you've got kind of one core benchmark, and you can see if you're kind of moving the needle there.
Exactly.
So then crypto, obviously, you're one of the most famous and prolific venture capitalists in crypto of all time. How did you arrive to this space?
That's very weird to hear you say that.
It's true though.
I mean, look, when I first came into the space, I was a nobody. And I remember the firms that I came into the space really admiring, like the Polychains, the Panteras, of course the Founders Fund, and then Andreessen and Paradigm, which came into the space in 2017, 2018. And when I first became a venture capitalist and investor, I was just like, why would anybody want my money? Why would anybody want to work with me? Why would anybody listen to me? I didn't know anything. And I came in the space full-time in 2017, and I had this sense that I was late, and it had all already happened. And maybe I was in for the seventh or eighth inning,
Right.
And now I'm reminded of a story that Mark Andreessen described when he came to Silicon Valley, I think in 1996. And he says when he came to Silicon Valley, he was worried that the internet was already over, and that he had basically missed the whole thing. And it's just a perennial feeling, and every single year somebody's showing up in crypto and they think they're late, and I'm sure Vitalik thought he was late when he arrived in the Bitcoin scene. And the reality is that there's so much to do that there's no such thing as being late when it comes to technology, because it just keeps changing, it keeps evolving. There's always another chapter. And so anyway, when I first came into the space, had no idea what I was doing. And it's funny, so I was recruited by Naval Ravikant to join a fund that he had started called Metastable Capital. And they were founded in 2014, a super OG fund. And when I came on board to Metastable, I knew absolutely nothing. Literally, I was building a company at that time. I was a software engineer by training, and I had no clue I knew nothing about finance. Literally all my money was in index funds, right? I didn't trade. I owned some Bitcoin and some Ether, and that was about it. And so I remember the first week that he brought me on board. So Metastable was a hedge fund, but it was kind of a hedge fund that did a bunch of venture deals. And when I joined the fund, I remember the first thing he told me was, Haseeb, I want you to figure out how to get us registered as an RIA with the SEC. And I didn't know what any of those terms meant. And so I remember the first week I bought a book that was like, hedge fund compliance for like handbook.
Right.
And I remember I was like taking a week off, but I wanted to show Naval that I was really working hard. So I took a photo of this book, hedge fund compliance. And right next to it, which wasn't in frame, was the book that I also bought, which was Hedge Funds for Dummies, because I didn't know what an LP was. I didn't know what carry was. I didn't know what management fees were. I didn't know anything. And so I just kind of learned, drinking from the fire hose and learning in real time and everything in crypto. This was the heyday of the ICO boom. And I was learning in real time what ICOs were and how all this stuff worked, and consensus and distributed systems and all this stuff, cryptography. I was ingesting it all at the same time, and it was so much fun. It was just really incredibly electrifying to see all these new ideas being experimented with and tried out in real time. And I just knew that this was, the way that I remember describing it at the time is that being an investor in crypto is kind of the best seat in the house, because you get to see everything that's happening,
right?
Everything that's getting created, all the ideas, and you get to make your own view about how this world is going to end up evolving as a result of crypto. And it's incredibly intellectually gratifying.
Yeah, interesting this about Naval, because Naval is actually the person that inspired me to leave the job I was working and go full time into crypto.
What was this job?
The job I was working previously was like a digital marketing agency, and I listened to the How to Get Rich Without Getting Lucky. I guess
that's the one.
And I was like, oh my God, like the idea of leverage changed, and then I immediately began to build an audience on Twitter and an email newsletter, but without that podcast, I would have never ended up coming into the space full time. So.
Right.
What were those? Do you have any of those early investments that were kind of memorable to you?
Oh yeah, so many. I mean, I think the very first deal that I did was Thunder Protocol. I don't know if you remember Thunder Core.
No.
So Thunder was founded by Elaine Shih, who's a well-known professor. She built it's very funny. It was centered around a consensus protocol, and the idea was that they were going to accelerate the EVM using this consensus protocol that has a fast path and a slow path. And ironically, this consensus protocol is very similar to the pipeline execution that would end up becoming very popular much later with Hot Stuff, which is what Libra used and which now is what Monad uses. And so the kernel of the idea was absolutely right. But the team just completely imploded. They ended up like spewing a bunch of money, doing all sorts of stupid stuff. It was a very bull market type story,
right?
Of like, okay, it's a great team, Professor Coin, very promising, and just all the money gets wasted and it's a total disaster. I think one of the maybe like third or fourth deal that I did was the seed round of Avalanche. And I ended up doing a bunch of great deals in that time. I mean, it was obviously an amazing vintage and a lot of amazing founders that were that came into the space to build really, really new ideas. I remember the seed round of Near was also one of the first fifth or sixth deal that I did was the seed round of Near, and it was just it was such an exciting time because everybody had new ideas, and it was very obvious at the time that Ethereum was not good enough for what people wanted to build. This was before the term roll-up was even invented. Roll-ups at that time, I think roll-ups were 2019 that roll-ups were first invented by Barry Whitehat. And so before that, people talked about L2s. When they said L2s, they meant Lightning. So Lightning was like the L2 in 2017, 2018. And I remember there was Lightning protocols, and there were side channels, and there was this and that. And so investing in that period of time, it was not that dissimilar to investing today in that there was a ton of bullshit, a lot of fly-by-night ICOs that were pitching just complete nonsense. And then there were some really serious technologists who were trying to solve big problems. And it was great to be able to sit down with them and help them think through how to build for a future that none of us really fully understood what was going to happen in crypto, right? This was a time when crypto was still very niche. DeFi didn't exist yet. The term DeFi was coined in, I think, 2018, 2019. The total stablecoin supply was like in the hundreds of millions of dollars. It was just a very different world than the world we live in today.
you know, starting in that time period where it was kind of bullish and early, did it kind of distort your perspective? Like, you know, because everyone's a genius in a bull market, right?
Yeah.
And especially investing in venture, right? It's easy to like be early to the early thing, and you know, for something like Professor Coin, right? You can be right, and then 5 years later, you still end up wrong. Like, was that a productive time? Was that a very educational time, or did that, you know, introduce some biases in your investing?
Oh, I mean, yes and yes. Incredibly productive, incredibly useful. I learned a ton of lessons. And of course, I became incredibly biased by your experiences. It's impossible not to be biased by your investing history. You know, if you grow up in the period of ZIRP, you're just going to have a certain perspective about how venture funding is supposed to get done.
Right.
If you come of age in the 80s, when interest rates are super high, you're like, well, it's so weird that interest rates were super low for 20 years. And so I think with respect to that generation of venture investing was all about infrastructure, right? There were a lot of applications that were pitched in 2020, right? In 2018. Most of them were, you know, we are going to build Uber on the blockchain or Airbnb on the blockchain, right? You remember this is the era when people thought X on the blockchain was like the thing to do.
Right.
And none of those things worked. And I think we were relatively prescient in saying like, hey, I don't think these things are going to work, because we didn't invest into anything that really had that kind of a shape. But I think the skew toward infrastructure at that time was really obvious, because it was so clear the infrastructure just sucked. Right? Ethereum was so broken. It didn't scale. The gas fees were going absolutely insane in 2017, 2018.
Right.
And at that time it was from things like CryptoKitties. It wasn't DeFi. DeFi wasn't a thing yet. It was just people moving Ether and then, you know, buying some crazy NFTs in 2017 that ended up making everybody realize that we needed much more capacity in blockchains to be able to support all the activity people wanted to do. But I learned a ton of lessons at that time about what it takes to really be able to see something through across multiple cycles. If you look at the difference between two projects that ostensibly were very similar, which were Avalanche and Thundercore. Thundercore, you know, and Avalanche, both professor coins. They were both innovations in consensus. They were both building in, you know, the sort of a successor to Ethereum in an EVM compatible world. But one of them made it and the other one didn't. And a big part of the reason why is really just comes down to people. Is, do you have the drive, the hunger, the longevity to be able to see something through building something? And building a protocol, I didn't understand at the time how much of a fucking gauntlet it is to build something for, you know, 6-7 years, through the ups and downs of people thinking that you're the smartest person in the world, and then thinking that everything in your industry is a scam and nothing you do matters. And we're going through one of those inflection points right now where people are super bearish on infrastructure, and they think that, you know, the whole financial nihilism thing has reared its head again. And if you've been in crypto long enough, you've been investing long enough, you've just seen it so many times that people lose the faith, they end up getting despondent, they end up getting disillusioned, and they forget where we started. You know, we started really in a world where, you know, people now, they talk about CBDCs and Donald Trump starting a crypto project and like all this stuff, you know, Iggy Azalea having a meme coin, and they're just like, yeah, whatever, you know, it's stupid, nothing crypto matters. I'm just like, dude, you have no idea how much you would have been laughed out of the room if you told anybody, I think in 6 years, Donald Trump is going to start a crypto project. Like, you're out of your mind. But here we are. You know, it's a completely unimaginable world that now stablecoins are like the 10th largest holders of US treasuries.
That's insane. That's a crazy stat. Do you think the industry has overcorrected around infrastructure, or not? Maybe not overcorrected, but, you know, there was a playbook that ended up coming about with infrastructure, where I think it was, you know, when you're building the financial rails that could potentially, you know, cannibalize the entire financial system, you can justify a pretty crazy valuation, and that, you know, incites founders and investors to want to work on and invest in those things. However, at the end of the day, you know, you do need something to be built on top of that infrastructure to justify, you know, the infrastructure existing, right? So do you think that, you know, what's your current opinion on infrastructure and how, you know, applications fit into that right now? So I mean, I'll show my hand a little bit. I was just talking about this earlier today. I think the dichotomy between infrastructure and applications is kind of bullshit. And
what I want to say is that infrastructure is consumer. Infrastructure is the application. Right. So like when you talk about, okay, what are the applications on top of Ethereum? Ethereum itself is a pretty huge application, which is just sending money, which is just trading, right? Like we forget that the original reason why all this was created, right? What was the Bitcoin white paper about? It was about sending money. That's what Satoshi thought the point of Bitcoin was just sending money. That's the application. And most of what crypto is fundamentally about is about money and finance. And those financial applications, we already kind of know what they are. It's not as though we're like, wow, what on earth will people possibly do with crypto? The answer is they'll send money, they'll send stable coins, they'll trade assets, and they'll speculate and gamble, right? Those are the verbs that people do primarily in crypto. Now, it's possible that you'll add to that repertoire of verbs, right? It's possible they're like, oh, maybe there'll be some sixth thing, and they'll play video games, and they'll get energy, and they'll do all sorts of other things that might be orchestrated through blockchains. But to me, it's a little bit like talking about social media. Like social media, if you think of it, social media after 2006, we basically had almost all of the major social media networks already in place by 2006. Now, they were not enormous at that time. They were still, growing. LinkedIn was tiny, Facebook was tiny, but the core ideas were all there. And after 2006, there were really no new social media companies. I mean, maybe TikTok from ByteDance, but besides that, it's been pretty static. And nevertheless, social media has taken over the world. It is absolutely massive. It's only grown every single year. But you might ask, where are the applications? Where are the social media? We're just going to be doing Facebook forever? And the answer is like, yeah, kind of. We are just going to keep doing Facebook forever. And it looks like we are going to be doing, Twitter and Instagram and whatever just forever. And that's kind of my view of crypto, is that the main story is the things that we've already been doing. And they just keep growing every single year. It's not as though it's like, oh, well, we've plateaued. There's no new people who want to use blockchains anymore. That's just not true. It's just not a good description of what's happening on chain. It's not a good description of what's happening through exchanges. It's not a good description of how many people hold Bitcoin, how many people use stablecoins, how many people are using DeFi. The numbers are going up every single year.
So, I understand that thesis, but still, if you talk about 2018, hundreds of millions of stables on chain, now hundreds of billions of stables on chain, right?
That's right.
1,000x increase. Is there room for 1,000x increase in stable coins still? Like, are we late?
We are later, for sure. You could ask the question, okay, it's 2012 in social media. Are we late? It's like, yes or no. I mean, like you're past the first inning, for sure. But is there a lot more growth to be had? Absolutely. I think the thing that's really clear about crypto is that most people are not really using crypto who obviously should. Now, there's a lot of people that you're like, oh, well, does crypto really help you? Do you need it to buy coffee in Singapore? No, your credit cards are fine. They kind of work. But then you go to somewhere like Turkey, or you go to somewhere like Venezuela or Iran or whatever, and you say, okay, how many people here are using crypto? And the answer is some people are using crypto a lot. And most people are not using crypto at all. And it's very obvious that they should, right? Crypto is just a direct net improvement in their lives. And that to me is the biggest sign. It's something we're kind of learning, and we learn it with every technology, more or less. If you think about AI, right? AI is a perfect example to, I think, sharpen this intuition. We've had ChatGPT now for 2 years, right? ChatGPT is smarter than the median human being, clearly, at like most knowledge-based tasks.
Sure.
Nevertheless, do you know how many people have used ChatGPT in the last year?
Don't know.
In America, it's less than 20%.
Wow.
Less than 20% of 80% of people don't even use it.
Right.
It's the smartest thing that we have ever created. Smartest intelligence we've ever created. 80% of people can't even think of something to use it for. It's $20 a month, and it's free if you use 3.5. It's literally free. But people are like, I can't think of something to use it for. So that shows in just such a stark way. And if you go outside the US, it's closer to like 10%, 5% in most countries. Most people just the smartest thing ever created. Yeah, I can't imagine what I could use a PhD level person that could ask any question in the world at any time. I can't imagine what I would use that for. So the reality is that it takes a lot of time, more time than you would think, for technology to really get integrated. Somebody made this point earlier that what's really surprising about AI is that there don't seem to be AI shaped holes in the economy. Meaning, we've had this thing for 2 years. Where are all the jobs getting displaced? We don't see them. There's no jobs getting displaced.
Right.
Why is that happening? And the answer is that, well, you can't just like plug this thing in and automatically take over a job. Actually, you need to change the job to be able to incorporate AI into it efficiently, right? The same thing was true of the steam engine. Steam engine absolutely changed the world. There were no steam engine shaped holes in the economy. You had to actually integrate the steam engine into other stuff to create the Industrial Revolution.
Right.
And that, I think, is in large part the answer to crypto, is that crypto is starting to get integrated into more and more parts of the world. But it takes time, and it doesn't happen on its own. It takes a lot of work and a lot of ground game to get the people, part of it, of course, is the laws and the regulations. But those are all moving in one direction, which is in favor of crypto, not against it.
So maybe that's the ultimate opinion is like, we're now in the ground game stage of crypto, right? We
that's right.
We have the stage set, but now it's about, moving forward and moving the post forward.
Exactly.
Interesting. Yeah. It's funny. Well, you mentioned Mark Andreessen, and I've talked to my dad about Mark Andreessen because he, studied computer science in 1978 and learned how to program on punch cards. And never even touched a computer until his senior year of college. So he was learning computer science without computers. And so I actually wrote an email newsletter on this once, is like my dad's view of technology, and it's multi-decade, right? Where, talk in just my dad's lifetime, he's gone from punch cards to Netscape, right? With Mark Andreessen, to Facebook, to, now crypto, right? And he's into crypto a little bit now. So like, it's such a, the what are they, like, the days are short but the days are long but the years are short, right? Like it takes so much effort in the day-to-day to advance these things, like long term.
Completely agreed.
So given that context, are you focusing on emerging markets in any way? Like what's your view?
I wouldn't say focus on emerging markets. We pay a lot of attention to how crypto is being propagated through different parts of the world, and we spend a lot of time in Asia, which is where a lot of the crypto adoption is really much more visible than what you see in the US. So we think in a very global sense about crypto, but investing directly into emerging markets tends to be pretty difficult without really knowing the market very well.
Right.
So from the US perspective, we call it emerging markets, but emerging markets basically means like most of the world. And it means a lot of language communities, and it means a lot of geographies that you really need to have a deep understanding to be a competent investor in.
Interesting. So do you think there's an opportunity for, crypto venture to, integrate or, try to tackle like Venezuela or the Spanish speaking world? Or something?
Absolutely. But, if you ask the question, who is doing most of the work to advance crypto around the world? Who would you say is like the number one force for getting crypto penetration in emerging markets? There's a right answer.
Like a specific project?
Specific project.
Well,
or group or company or whatever.
Tron?
It's Binance.
Oh, Binance.
By a fucking long shot. It is absolutely Binance. You go anywhere in the world where people are really using crypto, they think crypto is Binance.
Right.
It's kind of like how, in India, people think Facebook is the internet. Like that is because they have done such an amazing job of that ground game.
Right.
Of actually getting crypto into people's hands, into their wallets, and integrated into their financial lives. So, in a way, it is kind of the biggest gift that Binance has given to the industry, is the way in which they have had such an incredible operation in places like LATAM, in the Middle East, in Turkey, and all these different countries. And of course, you can have plenty of qualms with Binance and the way they operate, and obviously many governments do. But they are the single most democratizing force for getting crypto all around the world, even in places where it might be otherwise difficult for local entrepreneurs to be able to put together products and UXs that are good enough to be able to onboard tens of millions of users. Binance can do it.
Right. Do you think there's an issue with like scale for some of these markets where it's like, okay, how big can my payments platform or wallet be in Venezuela if I'm like specifically focusing on a Venezuelan market or whatever size market, right?
Yeah.
And that's why it's hard to get kind of a critical mass or attention in that area.
I mean, it's the same thing you see in Web 2, right? Like what's the Google for Argentina?
Google.
There's no Google for Argentina, right? It's Google, right? If you're a big enough geography, then it's like, okay, you've got Yandex in Russia, or you've got, Baidu in China. But if you're a small economy, the answer is that you're probably just going to use the juggernaut that can really do a global go-to-market. The same thing is true in crypto, is that if the geography is sufficiently small, then most of the time you end up having a global player who has most of the market share. The local players tend to own the local currency on-ramps. So, if you're in the Philippines, it's coins.ph. If you're in, Indonesia is a different one. Over here there's a different one. Thailand's a different one. But most of the time, most of the volume in that country is still going through Binance. But it's just crypto to crypto, right? They don't necessarily own the on-ramp because it requires a, more local, banking relationships and jurisdiction and licensing.
Interesting. So if crypto is broadly kind of at a ground game stage, if we think about crypto as an industry, do you think there are any kind of sectors within crypto that still have that 1,000x potential? Or?
Oh, absolutely. I mean, 1,000x potential is a function of your entry price, right? It's not a function of your exit price. So as long as the entry price is low enough, if you're investing seed stage or pre-seed, then absolutely there can be 1,000x's in many different domains, and there have been for the last few years. I think at the end of the day, we know that there are three big things that make almost all the money in crypto. And the three of them connect up to each other. And these three, they're sort of the three legs of the stool. And the three legs of the stool are, on the one hand, exchanges, like Coinbase and Binance. The second stool is blockchains, so like Ethereum, Solana, AVAX. And the third is stablecoins, so Tether, Circle, et cetera. If you're looking for, what are products or companies that can make, hundreds of millions of dollars or billions of dollars and can give you exits or, outcomes on the size of, tens, 20, 30, 50, 100 billion, only in these three sectors can you find those outcomes. And these three sectors, they're kind of the biggest things in crypto, and they connect up to each other in the sense that, if you're an exchange, you list stablecoins, because of course, everything trades against Tether, trades against USDC. You also launch your own stablecoins, right? So like Binance launched BUSD, Circle launched USDC. And you list blockchains, but you also create blockchains, right? So Coinbase is Base, Binance is BNB chain. And the same thing is true with respect to, blockchains. They list stablecoins because they need, to have DeFi liquidity and have assets happening on chain. And so all these things are, they're connected. But if you're looking for the really, really big outcomes, probably you have to be taking a shot at displacing one of these three things that make all the money. So if you want a multi-billion-dollar outcome, you need to either build a better stablecoin. So that's, think of something like Athena is a good example of, okay, they took a big shot at trying to crack a really, really big market, and the market rewarded them for that. If you look at, a blockchain, something like, Monad, Barachain, et cetera, or you're talking about an exchange, a new generation of exchange. You've got the DEXs, the DYDXs, the hyperliquids of the world, or the centralized exchanges. You've got, Bybit or BitGet, which are some of these new, second, third generation exchanges that are now competing with what used to be FTX, Huobi, OKX, the old guard of exchanges.
Maybe someone who's a bit jaded on the industry right now would say, yeah, easy for you to say that you can get 1,000x still easily at a pre-seed seed stage as a venture capitalist, right? And even if you look at something like, BNB token, right? That was an ICO at some 5 cents or something. It was crazy returns. Do you think there's an issue with the fact that there seems to be a very, very mature and developed venture ecosystem that ends up, for whatever reason, it feels like the returns for retail and the investing at an early stage for retail is a little bit more difficult right now? Yeah,
I'd say, so first of all, if you look at meme coins is entirely a retail phenomenon. And of course, the story that you were just recounting of all these people who made millions of dollars trading meme coins. Same thing was true with NFTs. NFTs was also a retail phenomenon. Now, of course, just as many people lost money as made money. And it turns out that's also true in venture.
In poker.
And in poker. Just as many people lose money as make money. It's not a free lunch, and it's not something that comes easy to anybody. But the reality too is that, VCs, there's no VCs who are making 20x funds. That's just not a thing. Making even a 4 or 5x fund is a great fund in venture. So 4 or 5xing your money, which in crypto plenty of retail investors I know have done much more than 4 or 5x their money. So the reality is that all investing is hard. Venture investing is hard. Hedge fund investing is hard. Investing your own PA is probably the easiest because of the fact that you can invest in things that don't require scale. So you can sort of, the mantra, the Paul Graham mantra, do things that don't scale. You can only really do that when you're small. When you're big, you don't really have the choice. Probably if Dragonfly were doing NFT trading, we could make a lot doing NFT trading because we have a lot of relationships. We could be taste setters or something, but we can't because NFTs are just too small. We only really can do things in size that most retail investors don't have to ever worry about having to do things in size. So I think there are advantages to trading your own PA or your own personal account as opposed to having to manage external capital. But there are also disadvantages, right? So it's true that there are investments that we get access to that a normal retail investor isn't going to get access to. Now, why do we get access to those deals? The answer is that we pay for it. We pay for it in blood, sweat, and tears. We have an enormous team that we leverage to help these protocols to figure out their go-to-market, figure out their branding, figure out their hiring strategies. We help them with just all the blocking and tackling that goes into building companies. And we know how to do it because we've been doing it for a very long time. And we've seen many of the best protocols go from inception to taking over the world. So a lot of venture capitalists are trying to do the same thing we're doing. And we're out there doing battle with them every single day to win the best deals and also to just get the questions right about what matters, what's going to work, what's not going to work, what are the correct architectures or the correct platforms or the correct consensus mechanisms or the correct virtual machines that are going to be chosen by developers in crypto. And you have to think really hard about it and get it right. And sometimes we do, sometimes we don't.
You talked about this like tripod of massive scaling returns, which is chains, exchanges, and stablecoins. Are there any narratives that you guys are investing in outside of that kind of trifecta?
Oh, totally.
Right now?
I mean, we invest in a ton of stuff that's not in that trifecta, but it connects to that trifecta in some way, right? So the farther afield you are from that trifecta, the more speculative it is that there's a real market there, right? So if you're kind of just, off deep in the forest of saying, I'm going to create, Web3 solitaire. It's like, maybe, but, I don't know, like, okay, but it might work, but it also quite likely will not work. So I think there's you have to have some ability to underwrite new ideas and to take risk and say, what I'm describing is not a prescriptive framework. I'm not saying that value should accrue into these 3 things. What I'm saying is more descriptive, which is this is just what we see, right? If you just go rank up, where's all the market cap? The answer is it's in these 3 things. So it's kind of like, looking at social media companies saying, wow, social media companies seem to make all the money. Why is that? I don't know, but it's true. So in that same vein, if you talk about narratives or things like, DeepIn or crypto AI, these are all things that we spend time on and that we've made investments in all these areas. But the reality is that none of them are proven. And I say that as somebody who finds these things fascinating. I spend a lot of time on crypto AI and on DeepIn as well. But most of them have, maybe one project that is a real, like, yes, this thing really works and has gotten to scale and has retention and stickiness and can make real revenue in the long run. That's okay. The whole point of investing in startups is that you're taking risks and that you're betting on what you think is going to work long-term in the future. But the main party is always first and foremost about money and finance, which is at the center of that trifecta.
I think we are in a time where people are jaded for various reasons. Maybe it's macro, maybe it's, because people feel like there aren't apps or, who knows, right?
Yeah.
But it's you're a crypto bull and maybe you need to be one.
Maybe.
If you had to say to the someone who's like, man, I just don't know anymore. I'm feeling bearish on the industry. I saw the crypto influencer plane coming to Singapore or whatever, and it seems topish to me. Who
Wait, what was the crypto influencer plane?
You didn't see this?
No, I didn't see it.
On Twitter, there was a plane that they chartered, which was like a party crypto influencer plane.
Oh, wow. Who was on this plane?
I don't know.
Were you on the plane?
Sandeep from Polygon. No.
Okay, all right. You were not invited on the Sandeep plane?
No.
All right, damn.
But people say, people are a little bit disillusioned, right?
Yeah.
If you, 60 seconds to say, this is why you should be bullish, this is why, we're only beginning, what would you say?
Yeah. Well, look, I'm never going to tell somebody to be bullish or bearish or whatever. What I will just simply say is zoom out. Like when I got in this space, people thought crypto was a joke. They thought the idea that crypto is going to change the world, that it's going to change the financial firmament, that it is going to rock, there's going to be a day that central banks are going to be talking about owning crypto, right? That was considered to be a crackpot thing to say in 2018 when I first got into the space, right? Since then, we've had the Libra scare the living shit out of every central bank in the world. We've had now a presidential candidate talking about the US government owning crypto on the balance sheet. We've had the rise of stablecoins, completely disrupting financial, like dollar flows. Stablecoins now settle more transaction volume than Visa. They're now something like 15% of ACH volume is just stablecoins. Like people, we have now, I think in the US, it's something like 13, 14% of American adults own crypto. That means more people own crypto than who have dogs.
That's crazy.
Right? It fucking happened. Crypto's a $2 trillion market. It happened. And the idea that people are now like, oh, the influencers have a plane and it's kind of embarrassing. It's like, oh yeah, they will. There will be lots and lots of embarrassments along the way. Every technology looks like that. But the reality is that the reason why we all got into this game is this idea that the future of money is not going to be like the past of money. And that is absolutely fucking happening. And that's what I'm excited about. So, will the price go up in next month or go down, or will Trump do this, or will, the Fed interest rates, blah, blah, blah. I don't know. Look, I'm not a trader, and clearly the people who are traders are not very good at trading. So, they're all down bad. But the long-term thing, which is always the thing that people used to say, and somehow they don't say it anymore, is just shut up and hold. Just buy crypto. Like the number one thing that you will guarantee that you will make money in crypto is if you just hold it and shut the fuck up and just calm the hell down. Like if you just don't touch it,
right?
No matter where it is that you bought crypto, you made money. And that's my exhortation to people is that you will see crypto just continue to change things and continue to win.
Excellent. Haseeb, thank you so much. Insightful as always.
My pleasure.
Excellent.